Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 270 on 18th of August. Did you miss this dramatic rally? We've had been rallying now for almost 2 months, and it's been a straight line up from 15,200 to nearly 18,000 today. So a dramatic move up, which nobody was expecting when Nifty was near 15,000. And that also brings home the point that it's very difficult to time the market and to try to catch bottoms and peaks. So staying invested is definitely one of the biggest lessons that we keep learning from time to time. So we will see in detail how this rally has behaved in the last couple of months and what one should do in terms of their investing behavior. Once again, market was trying to correct today. It did start soft. It came down a bit in the first couple of hours, but then there was an intraday reversal and we moved back up again to virtually a 0 point where Nifty closed at 0.07% up. Real estate stocks net did the best at plus 1.5%. Metal stocks recovered a bit at 0.92%. Private banking was up 0.6%. FMCG was also up nearly 0.6%. IT, autos, pharmas and PSU banks were a bit soft in the trading day today. But overall, a reasonably, I would say, good day, given that a lot of folks were expecting today to be at the end of the expiry, one of those days where market will give up, maybe a percent or so after the dramatic run up that we have seen. So if just for reference here, you can see that in the last 1 week, Nifty is up 1.7%, and in the last 1 month, we are up 10.3%. So 10.3%, and the average long-term CAGR on Nifty is about 12-ish%. So, getting this 10% in 1 month, actually, it has taken the juice out of several months from the past and from the future. And if you normalize it over time, that we've got almost 10 months worth of gains just in 1 month. So if you miss that month, that can get difficult for a lot of investors. In terms of the broader indices, small caps 0.27%, mid and small cap 0.19%. So very flattish day for most of the indices. Nifty also 0.07%. Nifty next 50 as in the last week, and we can check it with the weekly summary here. Let me go back and see. Okay, so I don't have this here, but Nifty next 50 has really done well in the last 1 month, and that has distilled the gains into Nifty next 50 10 and NF10. Also the highest gainer today at plus 0.69%, ATH up 0.65%, ATH2 also doing well 0.42%, and others were flat with MI25 losing some ground at 0.8%. In terms of the heat map of the day, IT stocks, as I mentioned, gave up most of the ground that they gained in the last day or two. There was some softness on Bajaj after running up yesterday. The biggest gainer, however, in the Nifty pack was Kotak Bank at 3.5%. IndusInd Bank also moved up 1.5%. And then there were some gains at L&T and Tata Consumers. These were all the sort of small segments, small pockets where some green was there. Otherwise, we had some large hits in IT as well as ONGC, BPCL, Nestle, Mahindra, some of these stocks where we lost some ground. But net, a very good day, very good week, a very good month, and a good quarter as well. In terms of the top gainers in the top 500 universe, Solara Active up 11%, Jindal Stainless 7%, India Bulls Real Estate has been running up plus 7%, IRCTC plus 6%, and Bajaj Electric also up 6%. On the losing side, SBI Cards, Home First, Sona BLW, IEX and Devyani International were some of the stocks losing 3 to 4.5%. MI India Top 10. This is a new strategy based on Nifty stocks. So this is just like NNF 10 is based on Nifty Next 50. India Top 10 is based on Nifty stocks, and it will select 10 stocks out of the current Nifty portfolio and rebalance them monthly. We have done extensive testing, back testing for this, and have been running it live at our own end for some time, and we feel that it can really create that alpha above Nifty over time. And I'll show you some stats right now. This is the strategy flow from 2016 onwards. The strategy, although we've disclosed the name, this slide still contains the mystery. But anyhow, the strategy basically clocked 21.2% in the last 6 years and 4 months up till 16th of August, while the Nifty has done 14%. So 100 rupees invested here goes to 231 on the Nifty. 100 rupees invested in strategy goes to 342. Let me say that expected dividends on Nifty are about 1.3 to 1.5%, and the expected dividends on the strategy are also similar. So dividends you can add in this as well, and we've not added in the strategy as well. In terms of costs, we'll disclose the pricing of the strategy very soon, but this will basically be a strategy recommended for some higher capital. So maybe 5 lakhs to 25 lakhs kind of capital is the target audience. Given that there is considerable alpha over Nifty over time, even a expense ratio of 0.5%, 1%, 1.5% will suffice for getting ahead of the Nifty. And our basic purpose is that we should remain a few percentage point ahead of Nifty over time. I mean, if we are able to do 15, 16, 17% and compound it over time, even that can generate enormous wealth. And if we are able to get near to 20 in the next 6 years also, that would be just fantastic, because these are very, very stable stocks, very liquid stocks, and the churn is very low. I think the churn in most years have been between 1 and 2 times. So, your 10 stock portfolio, so basically 10 trades, 10 changes in a year to maximum 20 changes in a year. I mean, that's the maximum that we have seen so far. So I'm very excited about this product. I think this product over a period of time will surpass all the other products in terms of number of users, in terms of AUM. Our top current products are MI ATH, MI All Cap, MI NNF 10. All these three are the top products in the bouquet of weekend investing, but I can say with confidence that this product will beat all of them in terms of the number of users who would want to come into this. So coming back to the market rally, we've had 15,200 going to almost 18,000 in a matter of 2 months, and at least I was not very sure what market will do once we had broken these bottoms of 15,750. I thought market will rally here and then go down further, but I'm grateful that or any of the product does not follow my thoughts. In fact, they follow a very strictly rule-based regimen where my outlook for the market has no value. So I'm glad that things are set up in such a way that my thinking has no impact on how the portfolios or how the strategies are performing, because it would have been a disaster if I was to have a discretion here that no, the Nifty is going to go down and I should sit in cash. So I'm glad that the me is out of the picture and the strategy is in the picture. So a great comeback for many strategies. Several strategies are near all-time high. Several strategies which were running in some drawdown are reducing that drawdown. A 2600 point run is totally out of the blue. I definitely could not have anticipated that. It's up almost 17%, and on an average basis, as I mentioned earlier, if we make about 12% a year on Nifty, or 14% as we saw in the previous chart over the last 6 years, uh, normalized, this would mean that 1 to 1.5 years of gain has already come in the last 2 months. So a lot of folks who try to time the market, maybe got out somewhere here and were waiting for lower levels to come in, but now the market has run up, so they will not be able to enter because of psychological pressure of entering at a high. While there are of course experts and magicians out there who are always able to pick the tops, pick the bottoms, and hats off to them, but most people, most normal investors are not able to do that, because it is the cumulative mass emotions which is causing these tops and bottoms to be made. So if I am feeling market is going down and you are feeling market is going down and most of the people are feeling that market should go down further, that's where the bottom will get formed, because we are thinking normally, we are not able to think out of the box, or to think in contra manner. And even if you're thinking in contra manner, you could have gone long here and then got stopped out or something like that. So it's very, very difficult that you have a successful each top and bottom to be pinpointed, and you're able to get in, get out. So I don't advise that at all. Just be very, very patient. Just keep sipping your capital gradually into the market if you're coming new to the market. If you've already put in substantial capital and don't want to put in more capital, just relax, because market gives over a period of time fantastic returns, and you have to just bide time when the market is not in your favor. So that's all that you need to do, because your underlying strategy will take care of the self-healing properties of the strategy. So if you are invested, let's say Nifty will also throw out all the laggards every 6 months, bring in new stocks, and it is a sort of a self-generating, or you can say survival of the fittest stocks kind of a theory that's playing there. And the same thing happens in all weekend investing strategies, where periodically we will throw out stocks that are not trending, that are going against the basic belief of being in an uptrend. So either we will go to cash, or we will go to the strongest stocks in that particular sector if it's a rotational strategy. So things basically over time are taking care of themselves. It's what I call a self-healing strategy. So if you are in a self-healing or a self-correcting strategy, then you just have to bide time. Even if you're not bringing in capital, you have to bide time, because by nature we are going to go up. I mean, we are in a growth country, one of the fastest growing nations. Companies typically grow few percentage point faster than the average GDP. If our long-term GDP is going to be 7-8%, you will definitely get 10-12% as an average on the index. And then if you are doing stock selection, you are likely to do much better than that also. So our sort of thumb rule benchmark is 15%. If we can get 15% over a long period, I think that's a fantastic compounding machine. You can do the math. If you get 15% CAGR over 10 years, 20 years, 30 years, you can do the math. There's enormous capital to be made. So don't worry if you've missed it. I think over a period of time, learn the lessons about what is your psychology, how you are able to pinpoint entries and exits, if in case you want to move in and move out. In case you don't want to do that and you want to just have a peaceful 2 minutes a month sort of an intervention into the market, please come and join any of the monthly rebalance strategies. Or if you are slightly more active, want to have a feel of the market every week, then you can come and join any of the weekly rebalance strategies that we have. But then during the week, don't bother about it. Don't let the noise get to you. Don't let the intraday fluctuations get to you, because that's not the whole purpose. The whole purpose is to have a life outside the market and only have great returns coming from the market using these strategies. So another sort of insight that I wanted to give to many new users especially is that once you've sipped your capital in for 3-4 years, so let's say you're starting out, and I started a new sip in October 21, for which I do a update every Tuesday. You can watch that. And I've been sipping every week on that strategy in a CNX 200. It's very simple strategy. Probably will do like 14 to 16% CAGR. So if you are sipping in that, within 3-4 years, you will come to a point where you are extremely safe in terms of your capital having made 20, 30, 40% XIRR, and the journey from there on will become very, very comfortable for you. So you will never see likely any reds on your screen, which causes anxiety, and causes people to stop saves, causes people to take out money, because it's all a psychological game at the end of it. We know the companies will do well over time, we know the growth is there, so it's just basically our behavior, how we are able to just keep ourselves together in those tough times, and how we have a strategy that takes care of itself. That these are the only few things that we need to take care of. So just do not really feel anxious if market has run up. Should I start or not? Definitely, if you have not started till now, please start now. Please start today. As I've showed you with that example where I started at the top purposely in that long-term SIP strategy. I started on 1st October 21, and today I'm sitting on an XIRR of 33% on that strategy. So it is possible to start at the top and still do well within a very short period of time. And I think within 3-4 years, when I keep sipping into that strategy, I'll showcase for sure that starting at any point is very good. You may have a bad patch for 1-2-3 years, but it will eventually come back, because we are inherently in a growth environment. So as long as you're doing asset allocation and diversification within your equity strategies, there's really nothing to worry about. Please try to take some risk if you are not taking any risk, and if you're taking some risk, then please take some more risk depending upon what your financial advisor will suggest to you. So just you need to have that patience of 2-3-4 years where some buffer will be made on your initial capital, and then onwards I can assure you that you will never feel scared of the market. So these are very simple steps that require some patience and your interference to be set aside. Please don't interfere with the strategies. Please don't try to outsmart the strategies. Some people are able to do better returns by coming in, going out, exiting below a certain moving average, doing something. If you are able to do that, if you're very active, please do that. But if you are don't want to fiddle around too much, don't want to increase your transaction cost, don't do all that, and just let it be on autopilot, and I can assure you that you'll do very, very well. So just try to give up control. I mean, this is our ego, our controlling nature, which ruins most of our investments. That I want to control, I want to do this, I want the market to do this, I want Adani stocks to come down, I want this to go up. It doesn't happen like that. Whatever is happening. You have no control over it. No, the biggest investors don't have control over it. So allow that control factor to go away. Allow the portfolio to run and flow like water, whichever way it is flowing. Just have a self-correcting mechanism and patience for a few years, and you will do really, really well. So thank you so much for watching, and please do share this if you find the content appealing, and I'll see you in another video. Bye.